Hello friends. I welcome you all to my channel, Jim Simon's Trading Strategy. I have rich experience in the day trading of futures and options in Indian stock market. I am inspired by the life and career of the great, Dr. Jim Simons. As you may be knowing, that second name of Wall Street is Jim Simons. He is legend and known to have cracked the Wall Street. He is an American mathematician, hedge fund entrepreneur, billionaire, investor, and philanthropist. Simons founded Renaissance Technologies, a private hedge fund based in Setauket, New York. As of 2021, Jim Simons' net worth is approximately $22 billion. Simons worked with the National Security Agency to break codes. He was the professor of mathematics at the Massachusetts Institute of Technology and Harvard University. Jim Simons is yet again the richest hedge fund entrepreneur in America, for the fourth year in a row, according to Forbes. Having a growth mindset is the key to being successful. I follow the process, strategy and rules defined by Jim Simons for the trading and investment in stock market, and this has been helping me tremendously. I have taken some liberty to modify the information about trading strategy by keeping in mind the India factor. I felt that it is important to share the most successful trading strategies and trading psychology aspects with others as well, and I will keep on sharing such information through my YouTube videos. In this video, I will share the secret formula to become successful trader of stock market. This has been prepared on the basis of my own experience of failure and success in the stock market trading, on the basis of what is really required for stock market trading in India, on the basis of information about powerful and winning mindsets like Dr. Jim Simons. While a proven trading strategy and the sound risk and money management system are extremely important, psychology is what brings everything together. Without right mindset, trading will become difficult, confusing and challenging. Here are the details of the secret formula. This can also be called as LSD formula, which is proven cracked the stock market. This is based on trilogy of goddesses who control the universe. Number 1 is Goddess Lakshmi, who is known to bless the person with money. Number 2 is Goddess Saraswati, who is known to bless the person with knowledge. Number 3 is Goddess Durga, who is known to bless the person with strong mindset. This LSD formula has a proven ability to break the Chakravarti, squared planning, of stock market. Now let us get into further details one by one. Number 1, money management. Protect your capital and profit. Manage your money and risk effectively. After all, it is your hard-earned money. If you can't manage the money, you will never be successful in any business. Never allow the market to take your profits. Keep your trading quantities small to reduce the risk of ruin, to reduce emotional involvement, and to give you the chance to learn from your mistakes without major consequences. The risk of ruin is the probability that you'll lose so much money you can no longer continue trading. If you have capital, you're in the trading game. But if you don't, you're out, especially when learning how to trade consistently. Keep your risk low, even when you are getting good, a bit low, because you'll have losing periods. And when you do, you want to observe them well and not take big chunks out of your account. Most of the traders are reactive and they are affected on a daily basis by fear and greed. If you have 1 lakh rupees account, and you risk 10,000 rupees on each trade, it only takes 10 losing trades to be out of the game. When you trade big and you're in a losing position, you get discouraged every time the market moves another point against your position. That's why one of the easiest way to decrease this emotional effect on your trades is to lower your trade size. This way you win if the trade doesn't go as expected. You get the chance to learn from your mistakes without major consequences. From a purely psychological standpoint, it is essential to minimize the potential impact that a losing trade might have on our account balance. If you lose big on a single trade, it will affect you. But if you limit the amount of capital you risk on a single trade, it won't hurt at all. You can pick yourself easily and move on to the next trade. It's much easier to take a loss when the real impact on your account is minimal. In a nutshell, respect the money. Respect the goddess Lakshmi. Success will follow you automatically. Number 2, knowledge gain. Study the behavior pattern of market. Gain complete knowledge about the rules of game. Trade off to minimize the impact of any single losing trade and to build skills. Trading may seem simple on the surface, but it's hard to implement your knowledge in live market conditions. Every day, every trend, every pullback is different. Nothing looks exactly the same as it did in the textbook examples. To get proficient at implementing a method, you need to practice a lot. Like in sports when you do drills to create muscle memory. In trading, you need to trade off on to build skills and refine your strategy. and you need to trade small. Being a trader is ultimately an act of competing against yourself. It's about self-improvement, about being better than you are today. Successful trader means being consistent over the long run. This means being diligent, learning from your mistakes, and keeping your emotions in check, staying within your risk tolerance. And if you don't know something, learn about it. The only way to become a better trader is to practice. It's only the first step in the three-step process of practicing, reviewing, and adapting that will enable you to dramatically improve your trading skills. The self-review process is very important and often neglected by most of us. This involves looking at all your trades and actions and emotions for the day, and assessing how well you followed your trading plan on each. If you took lots of trades that weren't part of your trading plan, that's a problem. If you looked at the chart for the day, and you saw trades that you were supposed to take, but didn't, that's also a problem. Look for problems or areas of improvement within your endless strategy itself. When you lose a trade, you will learn from your mistakes, and it motivates you to work even harder. You're on the right track. It can be hard to maintain your motivation, particularly when you've had a bad trading period, or feel that you're not advancing as quickly as you'd like. Or when you have a small account. No matter what you do, it seems like it's not worth all the effort. I always keep my mistakes and lessons learned in front of my screen while trading because we as traders tend to commit the same mistakes every time. Having a list with domestics made right in front of your eyes every day reinforces positive habits and assures you that you avoid repeating those mistakes. To get the long-term consistency, you must create your own system by observing what is useful, discarding what isn't, and adding what is uniquely your own. Think of trading as continuing education. You need to remain focused on learning each day. It's important to remember that understanding the market is an ongoing process. When it comes to trading, we often develop our views from the opinions of others. This is fine to start. But as we continue to develop, we must be able to accept that something we once thought was right may actually be wrong. It's important to always have a critical eye, and you must find your own spot by implementing what's right for you, and discarding the tool for information that don't align with your own style. In a nutshell, respect the knowledge. Respect the goddess Saraswati. Success will follow you automatically. Number 3. Strong mindset development. Manage your emotions, fear and greed. Develop a strong mindset to trade your set of rules, not your impulses. Don't run after big profits. Take home whatever profits given by the market. Please understand that trading is the business of probability and not the perfection. There will be the profitable trades and there will be the losing trades too. And you will need to accept this fact. You will need to ensure overall profit at the end of the day or at the end of the week. This is where the role of strong mindset comes into the picture. Impulsive trading is a common psychological mistake that all traders struggle with. And more often than not, those impulsive trades turn out to be losers. This isn't surprising though, when you consider that an impulsive decision is one without a plan. Not having a plan is perhaps the biggest factor which leads to impulsive trading. The reality is that it's so easy to get caught up in the market's movement. Instead of seeing a potential risk of not following your rules, you only see opportunities passing nearby, and that's a dangerous way to view the market. The solution is to plan your trade so you can trade your plan. By planning your trade in advance, you are setting the ground rules as well as your limits. If you know what you are looking for and how you plan to act, if the market does what you anticipate, you will be able to be objective and stand aside from the fear or greed cycle. Winning in the market is a function of habits. Unfortunately, so is losing. Making money from the trading is simply a matter of repeating the same effective steps time after time. It's all about keeping good habits. But the opposite is true. If you have bad habits, you will need to work on the same. Every trader has its own bad habits that may be holding him back from trading success. Examples of bad trading habits are like failing to manage your trading risk, or revenge trading after taking a loss, or jumping from one system to another, or sticking to your trading plan when it's proving a failure. We're getting emotional and impatient. This is something you have to figure out for yourself. Find your bad habits, your own weaknesses, and replace them with good habits. Remember, even if you cannot control the market, you can control your own behavior. Good trading habits includes keeping a balanced schedule and lifestyle, being disciplined, avoiding big risks, keeping a journal, and many more. Successful people, not just traders, don't attain success by luck alone. They have consciously adopted some good habits that help them to become successful. Trading opportunities are endless. There's always another one coming. Don't get attached to any single trade. Trading must not be about a single trade. Although for most of us, it can be discouraging when we plan a trade, apply our entire logical plan, and then find out that the market doesn't agree. It's a matter of training yourself to accept that not every single trade can be a winning trade, and that you must accept small losses gracefully and move to the next trade. And you must allow opportunities to come to you and to never chase the market. If you missed an entry, so be it. There is another one just around the corner. Don't focus on the individual fluctuations in your account, winners or losers. What counts are your long-term results. You will inevitably have periods with considerable gains and at our buyers significant losses. Of course, it's easy to become excited and overly eager to make more trades when a favorable price movements benefit your trading account. And there will be also days when the market completely turns against you. A consistent trader understands that neither extreme will last forever, and that in rolling through the good and the bad is a skill that enables you to learn and grow. One trade winner or loser shouldn't matter. So make sure you don't make any one trade matter by risking too much money or by feeling desperate to win. Instead, base yourself to win the long-distance trading race. The goal is to win long-term, you aim for consistency. A good trader is someone who recognizes that he cannot predict the markets. The market is essentially a marketplace for traders and investors driven by supply or demand. There are hundreds of factors that come into play. We cannot know for certain what will happen tomorrow. When we have several successful trades in a row, we get the feeling that we are invincible, that we know what the market will do next. We learn to predict the price movement. What to watch bright often leads to disaster prior to going to be a competitive emotion. Thinking we can predict the markets can be dangerous. For example, a very common misconception is that support or resistance will hold or not. The break of this level will cause a substantial breakout. Making assumptions that a breakout will occur or that the level will hold off of our move is an attempt to predict the market. Rather, you should watch what occurs around these levels and then enter as momentum moves in one direction or the other. By doing so, we are not predicting that something will occur. Instead, we enter into the current price flow. This makes trading a matter of fact, as opposed to emotional. In a nutshell, respect the strong mindset. Respect the goddess Durga. Success will follow you automatically. Stock market trading is one of the difficult business, but it has got unlimited potential to make the money, and only few succeed in doing this. It would be our pleasure to share our hard-earned knowledge and experience with you. Join us and grow with us. Friends, as always, if you learned something new or found value, leave us a like to share support. And don't forget to subscribe our channel, hit that bell icon to get notified every time we release a new video. It was great to see you.